Good morning, afternoon, and evening. Thank you for attending part three. This is for business owners, how to avoid the tax blues and pro tips on dealing with the IRS. I'm a certified financial and tax advisor. I'm also a certified pro advisor with QuickBooks Online. Anyway, excuse me, let's recap uh, part one and two. Poor record keeping. It's important to keep your records in order. It's best to have excuse me, a software program such as QuickBooks Online. It would be even better if you're working with a certified pro advisor or bookkeeper. And that will free you up to help you run your company rather than deal with those numbers and, you know, uh, put that effort towards growing your business. You want your books to be accurate and reflect your current business situation so you can make decisions on how to move forward or how to grow your business. Okay, so that's really important. Not reporting all of your income, whether you're a cash business, credit business, a little bit of both. IRS has a way of tracking your income, so be mindful of that. Having the proper business entity, that's very important, as I mentioned before. If you're a solo entrepreneur, you probably want an LLC, uh, versus an SCorp. A lot of people, I need an SCorp. Not necessarily. If you have employees, maybe you need an S corp. An S corp and a C corp is taxed differently, and LLC is taxed differently. It's what they call a flow through, flows right to your 1040. The LLC and S corp. Misclassifying employees, that can cost you a lot of money in the long run. If you're saying somebody is a 1099 employee and they're a W-2 employee, and IRS comes in and says, "Hey, these are 1099 employees. I mean, these are W-2 employees." So you got to go back, whether it's a year, 5 years, whatever that number is. And now you got to pay the withholdings for Social Security, Medicare, federal and state taxes. That can be very costly. Okay. So be careful of that. Go to the IRS site and they'll give you more information on the rules for classifying your employees. Also, since this is tax season, these are things that can cause an audit. Reporting the wrong income. We talked about that. You want to make sure it's right. You don't want to over report or under report. You want to make sure it's right. Excess deductions. That can be a problem, but not necessarily if you have all the documents and receipts to back up those deductions and they're business related, you're fine. Continual losses on the Schedule C. That could be a problem, and again, it's a gray area. You want to make sure it's not a hobby, but actually a business, and you have those documents to back up those deductions. Error within the tax return. That's actually going to get a call from IRS. Excess business expenses on the home deductions. There are rules with that, so you want to go beyond that and report stuff that's not you're not qualified for. If you find yourself in an audit, just make sure that you gather all your documents, all your receipts in the area that they're asking for. Don't volunteer any other information. You want to look at those supporting documents and receipt, see what they add up to. Hopefully they add up to, the deductions that you took. If not, then there's going to be some taxes, interest, and penalties. Okay. Again, since this is tax season, let's go over a few things that you need to get together for your tax pro. If you're using an accounting and tax software such as QuickBooks, like with my clients, I just close it out for the year, and I have all their business expenses there in QuickBooks. I just print it out and then prepare the tax return. Okay, so so if you have software, you just close it out, give them the year-end statement, and you're fine. Okay, if not, hopefully you've done a good job with the checking account and your credit card account, your business credit card account, to put all that uh, together. Okay, so preparing your taxes, your business taxes. These are some of the things you need to look at. Of course, office supplies, cell phone. Now, equipment like um, laptops, if you have a car, any type of equipment used in your business, you can depreciate that. They have different ways of depreciating and accelerated depreciation, where you can take most of that depreciation in the first or second year, or you can depreciate it out for 5 to 30 years, depending on the equipment. Okay. Any professional services that you've hired, your computer guy or your tax person, your accountant or financial planner, those services, website, tax services, accounting services. I just mentioned contractors, okay? Any salary, obviously, you pay to employees, okay, are deductible. Travels and meals, those are deductible. There's some limitations to that, but they are deductible. Another thing I want to tell you about, which is this, no, do not do this. Do not commingle business and personal expenses. That's creates a big problem. And as I mentioned before, does not give you an accurate record of your business, because you want your records to reflect, the true situation in your business. See if you're overspending or underspending, or you're spending stuff on things that are unnecessary. So those help you. Your records will help you look at that and to make those decisions. So again, this is the end of part 3. I want to thank everybody for attending. Like I said before, we're going to be doing other videos on personal financial planning, accounting, bookkeeping 101, investing. So stay tuned for that. I know it's this tax season. Happy tax season. If I can be of service to you, let me know. If you're having an IRS problem or tax problem, or you just need some professional advice, just all my information is on the screen here. So have a great day. We'll talk to you soon.